and welcome. You're watching Commodity Champions and I'm Anisha Gupta. It has been a fairly good start for the industrial metals in 2023 with copper, aluminum and zinc nearing 7-month highs, supported by a weak US dollar and China's economic situation. On a monthly basis, copper prices have surged 12%, zinc 14%, but tin has seen a big rally and gained 23%. So will the metal space sustain gains this year? What are the factors that will impact the prices? To get answers to all of these questions, I am now joined by Ole Hansen. He's head of commodity strategy at Saxo Bank. Ole, hi, good to have you. And what a start to 2023. The whole metal sector has been abuzz. Is it all the China pent-up buying, or do you think there is actual on-ground buying and not just the sentiment playing part?
I think as we start the year, it's a lot to do with sentiment, to do with the markets or traders positioning themselves into markets they believe will have a good run in 23. So obviously we kicked off the year with breaking out some key technical levels that has triggered some additional momentum buying. So basically what we're saying here, both for gold and industrial metals, is that while we believe the direction is correct, we think the timing may just be a little bit off, because right now I think it's mostly just investor buying, getting into the market, and following that we need to basically the hard work really begins. That's when we need to see that real demand also actually picks up to justify the price levels that we have achieved over the last month.
Well, absolutely. How much is the part inventories playing here also, Ole? Because we've seen LME inventories decline to half of where we were in 2021. And the chart will show you on how nickel, zinc, aluminum, all of these inventories have declined anywhere between 40 to 80% in 2022.
Well, visible stocks across the industrial metal space it's pretty frightening graph. If you look at the long-term developments, that they are very weak or very low. If you look at visible stocks monitored by exchanges in London, Shanghai and New York, and that does obviously raise the question about what happens if we do see that a potentially strong pickup in demand at a time where you could also argue that supply should not be forgotten. The supply side is also somewhat challenged. We've got with copper right now, the riots in Peru having an impact on potentially 2% of the global output. And it just highlights also that even though there are expectations for industry responding to higher prices by producing more, there are challenges ahead that will potentially keep that supply at a relatively low level, and that will underpin prices as well.
I'll take the question different for both. Starting with supplies first, and we do understand that there are inventories which are already on the lower side. How about the capex investments? There are some labor negotiations also coming on the way. What is it that concerns you the most about supplies?
Simply that prices are actually, even though they are relatively high, they're still not high enough really to incentivize mining companies to go all singing, all dancing into finding new projects. And at the same time, we're also seeing that ore grades is coming down. So you need more material out of the ground in order to get the metals that you're looking for. It's you mentioned wage negotiations. That's going to be a very tricky one. So general cost of production has been going up, and that basically means that we need high prices in order to sustain the outlook for investments and the ability to produce the metals that we are going to be requiring in the coming years, especially as we continue to move towards the green transition, which we all know requires metals of all shapes and sizes and colors.
So, various banks and brokerages, including yours, all have mentioned that the metal prices will go up from here. And if I read all of those reports, the increase, the consensus falls between 10 to 20% of a forecast. What is your sense on what metals are expected to do better than the others?
Well, I stick with copper. I really like copper. I like aluminium as well from the supply side perspective. These are metals where we're also seeing quite a lot of the concentrated interest from investors coming in. So that these are really the ones I like, and I stick to. Liquidity, you mentioned tin, 23% up. It is obviously a very dismal liquidity market, which obviously is only primarily used by actual physical users. So I keep a close eye on copper and aluminium, I'll say.
And how much of gains are you anticipating for this year?
Come again?
Ole, how much of gains are you anticipating for copper and aluminum for this year?
Well, I wouldn't be surprised if we do see a new record high in both copper. 10,500 level is obviously within reach, but I believe we will see a pause here within the next month or so. So, as I said, the direction is right, the timing is slightly off. I want to see the hard work now to also support the pickup, and that potentially may not come until the second half. So, still believing that we could see these new record highs as we move into the second half, after a bit of a lull here as we move towards the second quarter.
And while the Chinese demand is something that the markets seem to be playing on right now, what's your sense on the developed world? How do you look at the Europe demand coming back, US same?
Well, the energy crisis in Europe has obviously been called off. We were obviously saw a lot of reports, everyone getting busy about calling the end of Europe at the end of last year. It hasn't happened. Industrial production is holding up, even though gas demand is down in places like Germany by 20%. So we learned to live with higher price. We now rationalized, and we're now seeing the impacts. And obviously, Germany, as an example, is very dependent on demand from China. So if we do have a positive China story, that will also likely be a positive Europe story. A little bit more concerned about the US, because obviously we got a lot of conflicting data there right now. We saw the leading indicators yesterday, just basically highlighting that we will see a recession within the next few months. Even though it may not, the next few quarters, even though it could be a shallow one, it will raise some concerns about the demand outlook in the US. But generally, the transformation process that we're seeing is ongoing, and it will be continuing at a very brisk pace, almost no matter the level of economic activity in general.
All right. Before we take a break, Ole, I also want to understand on what's your sense on the precious metal. I mean, you've talked about gold, and we have Philip and Michael absolutely waiting on the other side of this break to talk about that. But let's start with you. What's your sense? How do you look at the precious metal prices right now?
Well, we like gold throughout last year. We thought gold had a fantastic 2022, trading unchanged in dollars at a year where we had a massive jump in the dollar, a massive jump in yields. Now some of these are starting to reverse, and that's obviously providing a lot of tailwind. At the same time, as I said, we got leading indicators potentially indicating a recession. That's bringing down the risk of higher interest rates, and that's bringing down the dollar as well. So all in all, it's really almost a Goldilocks outlook for the metals right now. Just like copper, I just want to be a little bit devil's advocate that it's happened maybe a little bit too fast and too soon. And with that in mind, I'm looking for better buying opportunity than current levels. But the direction for the year that we're seeing started with gold is the right one. Silver, I'm a little bit perplexed about. It's not following suit, even though we have the strong rallies in industrial metals. So silver is silver and platinum is still waiting in the wings, but gold for now is the one that's attracting all the attention.
Oh, it absolutely is. $19-30 ounce plus kind of levels is what we're trading on. Ole, as always, thank you so much for joining us and taking through us all those metal prices there. But with that, it's time for a short break. But do not go anywhere. We shift focus completely to precious metals when we return.